According to Refinitiv, companies in India have raised $1.6 billion through 13 initial public offerings so far this year, marking the biggest gains from equity listings since 2008, with the previous week being the busiest of 2021, with 5 companies launching IPOs, including the diamond and gold merchant Kalyan Jewelers, chemicals maker Laxmi Organic Industries, and Nazara Technologies, the first Indian gaming company to go public. This mirrors the global trend where many companies have gone public successfully and some even enjoying major listing gains, such as DoorDash, the US based food delivery platform which posted listing gains of 86%, or Airbnb, which is another US based company which operates as an online marketplace for vacational rentals and tourism activities, posted listing gains as high as 112%. Even Indian companies such as Mrs. Bector's Food Specialities, which is the largest supplier of buns in India, posted listing gains of 106.79%, whereas Burger King posted listing gains of 130.67%. Therefore, it doesn't come as a surprise that so many companies want to go public. Considering that last year, due to the pandemic, the Indian stock market added more than 20% retail investors, and it has also doubled since its lowest point in March 2020. Both Nifty and Sensex have hit their all-time highs since the March 2020 lows. This boom in Indian stocks has encouraged Indian companies to raise cash at the fastest rate since the global financial crisis, raising fears that the share prices are overpriced as the country tussles with rising COVID-19 cases. Hemang Jani, an equity strategist at Motilal Oswal, said, "Over the last 5 years, the equity market itself was very dull and there wasn't much happening in terms of IPO activity. This year, we are seeing very strong momentum and there's a big pipeline. This euphoria isn't limited to IPOs but has also spread to follow-on equity sales by listed companies. Real estate group Godrej Properties raised Rs 37.5 billion through a share sale that closed last week. Private equity firm Carlyle, which is also selling a similarly valued chunk of shares in SBI Cards, the credit card provider of India's largest bank, which went public last year. In 2020, although only 18 mainline companies listed successfully, they raised more than Rs 30,000 crores, which was more than double the amount raised by 16 companies in 2019 and the same as the 24 companies that listed in 2018. 2020 gave average listing gains of 35.6%, which turned out to be the best in 10 years. Average listing gains in 2017 and 2014 were 22.25% and 21.92% respectively. For the decade, 2011 had the worst show, with average listing gains of 0.78%. This showing in 2020 was largely because of the excess liquidity and positive investor sentiment. However, as the 10-year US government bond yields hit a high of 1.74% last week, investor sentiment struggled to stay positive as Nifty shed 1,000 points from its all-time high of 15,500 points to reach a low of 14,500 points last week. With the government bonds being a safer bet for investors, it is not hard to understand why investors are pulling off their money from the equity markets. This volatility in the equity markets due to the effects of a higher bond yield will definitely affect the IPOs in the coming weeks, but the extent to which it will impact the IPOs is to be seen, as there are some really good companies lining up to go public. Although there is general enthusiasm in the market when it comes to IPOs, because of the fact that many companies have given great listing gains in 2020 and 2021, and that there are many companies that investors are excited for, such as Zomato and Policy Bazaar. It won't be surprising if many of the companies that are supposed to go public this year would not go ahead because of the state that the markets are currently in. There are many that are taking the recent run of companies going public with caution, worrying that it could signal that the market is overheating as the rally in the markets outpaces India's corporate and economic recovery from the pandemic. It is also feared that the rise in COVID-19 cases once again might bring back the restrictions that were imposed earlier which might affect business operations. From a low of fewer than 10,000 daily COVID 19 infections last month, India recorded nearly 47,000 cases in a single day this month. Many people also believe that the markets are currently overpriced and are long overdue for a correction, given how much primary and previously non-free float stock is coming up for sale. Although it remains to be seen how many companies will go public this year, sticking with their initial roadmap, even if investor sentiments are low, or how big the listing gains will be if the investor sentiment is positive. The one thing that is certain is that the number of IPOs that come out this year will surely depend on how the market sentiment is.